Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of corporate finance to reveal the truth behind the numbers. And today we're diving deep into SEI Investments Company's latest quarterly report. And let me tell you, there's a lot to unpack here, maybe even a significant win in the fight against fraud. So buckle up and don't forget to join our Discord community linked in the description below, where you can chat with other finance enthusiasts. First off, we have SEI Investments Company, and this is a pretty standard report for a company like this. Let's dive straight into the heart of it, the financial tables, and first up, the consolidated statements of operations. For the 3 months ended June 30, 2025 and 2024, we see that total revenues jumped by a healthy 8% to $559.6 million. This growth is boosted by really strong performance in their investment managers segment, which saw a 9% increase in revenue, and their investment advisors segment, which grew revenue by an impressive 14% in the 3-month period. The investment managers segment saw revenues climb primarily because they're providing more services to their big alternative fund clients, and also due to positive cash flows into their funds. For the private bank segment, revenue is up thanks to increased investment processing fees, mainly from their SEI Wealth platform clients, and also from market appreciation boosting international client investments, though some fee reductions and client losses did temper this growth slightly. Investment advisors' revenue growth was significantly driven by their CI integrated cash program, which really expanded in late 2024, and also by gains in separately managed accounts thanks to market appreciation. But they did see a dip in revenue from their SEI fund programs as clients are shifting to other products. The investments in new businesses segment revenue increased by 13%, driven by new business in their network and data protection services and growth in their private wealth management services. Looking at expenses, they went up 7% to $410.9 million for the quarter, which is a bit of a drag, but considering the revenue growth, it's not too alarming. This led to a solid 9% increase in income from operations to $148.6 million. But the real story here, and it's a big one, is the net income, which soared by a massive 63% to $227 million for the quarter. Why such a huge jump, you ask? Well, the company completed the sale of its family office services business on June 30, 2025, raking in a cool $94.4 million gain on that sale, which is a pretty significant chunk of that net income increase. Their equity in earnings from LSV Asset Management, however, saw a slight dip of 2% for the quarter. Now let's look at the balance sheet. As of June 30, 2025, total assets stood at $2.6 billion, a slight decrease from December 2024. On the flip side, total liabilities also decreased, making the company appear financially healthier on paper. But let's dig into shareholder equity, which grew to $223 billion, primarily due to that net income boost. They also managed to shrink their accumulated other comprehensive loss by a decent amount. In terms of cash flow, for the first 6 months of 2025, operating activities brought in $243 million, which is up from the previous year, mainly due to that higher net income. However, financing activities used up a hefty $419 million, mostly from stock repurchases and dividend payments. Speaking of stock repurchases, SEI bought back a significant amount of its own stock in the first half of 2025, spending over $373 million on this. Now, let's talk about strategic moves. SEI entered into an agreement to acquire a majority stake in Stratus Wealth Holdings. This is a big step for them, aiming to get a 100% ownership eventually, and it's a pretty interesting move for a company of this size and industry. And in some rather positive news on the legal front, the Rubicon Wealth Management situation is finally seeing some resolution. Scott Mason, the founder, was sentenced to nearly 97 months in prison for wire fraud, securities fraud, and tax fraud. To name a few, CI Private Trust Company was involved as a custodian, and while they face several lawsuits related to this, some claims have been dismissed, and CI is defending itself vigorously, although they anticipate potential losses related to the some claims have been dismissed, and CI is defending itself vigorously, although they anticipate potential losses related to the client assets transferred. On the regulatory front, SEI Investments Europe received a notice from the UK's Financial Conduct Authority requiring a review of their governance and control environment. It's not an enforcement action, but a standard supervisory review, and CI is cooperating fully. The company believes the steps being taken will strengthen their business and maintain compliance. Overall, SEI Investments Company had a pretty good quarter, driven by revenue growth in key segments, and a significant gain from a business divestiture, while expenses did increase and financing activities were heavy on buybacks and dividends. The company seems financially sound. The Stratus acquisition signals a focus on growth, and the positive resolution in the Rubicon case is a significant burden lifted. The UK regulatory review shows proactive engagement with compliance. SEI is navigated via our Discord community linked in the description. Thanks for watching, and see you next time on Corporate Decoder. Button and subscribe for more corporate deep dives, and don't forget to join our Discord community linked in the description. Thanks for watching, and see you next time on Corporate Decoder. In don't forgetting a complex regulatory landscape, but appears to be doing so effectively. So what's your take on SEI's performance and their strategic moves? Let me know in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more corporate deep dives, and don't forget to join our Discord community linked in the description. Thanks for watching.